So welcome to today's brief tutorial. Today we're going to be learning how to trade futures. Futures trading is a very interesting kind of trade that a lot of people ignore, but it's very useful in today's world, because you don't just leverage what you have, you can also leverage on what your broker has and gain profit. So we're just going to be diving straight into futures trading today. Today we are going to be using Bybit. Bybit is going to be our broker for today. For some reasons, Binance has banned Nigeria, and so it's hard to connect, except you can be able to use your ID's connection, but we are using Bybit today. So this is my Bybit account. And you can see the demo trading here. We can say watch now, but that's not why we are here today. We are here today to carry out what is called Binance futures trading. Now I'm already signed in. Before you get to this point, you must have to log in. It is very, very important, and you must also have to deposit. For this account, I don't really have any money in it. I've not really deposited yet, but I'm going to teach you how to do that, of course. Now, the easiest way to deposit here is the easiest way I know of, though there are so many other ways, is to carry out what is called P2P trading. P2P trading. P2P is simply peer-to-peer trading. I'm trying to get it. P2P. Where is our P2P? P2P trading, and they actually have zero fees. They don't charge you anything for your deposits. It's very interesting. It's very, very interesting. So we're just going to dive straight into P2P and see how we can be able to deposit. Now, basically, what you really need is to have coins in your wallet. You need coins in your wallet in order for you to carry out futures trading. Now, you can see for a variety of traders right here, they are offering this amount. You can see. So, for example, if I needed just 1K, okay, or let's say, what is the minimum we can get from these guys? Okay, we have somebody here that's going for 1,100. So we click buy. So let's say I'll pay 2,000. You can see, receive 1.5 USDT, and once I click buy, initiate an order, and then you have to pay. I think I need to try this out for you guys to see. Once I click buy, you see it initiates an order here where I need to pay into this account. This is an OP account. You can see all my details right here. Once I pay into this account, the guy is going to release. He's going to release the coins into my account once he receives the alert, and then your account is going to get funded. And once you get funded, then you can dive straight into futures trading. Now I'm going to cancel this order. I may no longer proceed with this order. So in order for you to trade cryptos, it's what is called derivatives. Derivatives is one of the options we have up here. So what we are doing tonight is USDT perpetual. Now under USDT perpetual, you find coin pairs in which you can trade. These are coins that you use to trade them against each other in order for you to get profit. So I normally advise my students to trade BTC USDT. That's the most stable coin pair you can ever find. There's no way it can swing, like fluctuate or get to a liquidity that hits you out of the market. No. Once you're trading BTC USDT, you're sure that the coins are a little bit stable, though the liquidity in crypto is more, but when you trade more stable coins, you realize that your risk is of being out of the market is less. So we're going to be using USDT, BTC, USDT, and BTC. You know it's Bitcoins. Now you get to, this is the chart. This is the chart on the other table. Now on this part of the screen we have, this is the chart. This is the chart, and then on this part we have the other table. The other table. Please don't forget, we have the charts and we have the other table. Now on the charts here, you can find, you can see there is price fluctuation. The red candles here indicate a selling price, and the green candles here indicate buying price. Now wherever you see there are red candles, you know that there is selling action in progress. Like for example, this candlestick right here is indicating a selling price. Now there's what is called combination of candlesticks. Now when you combine two candlesticks together, you can be able to tell the kind of candlestick to expect. That's why there's a lot of forecasting in trading. A lot of people believe they know how the market behaves due to the trends that we have here, and they can be able to speculate to tell us how price is going to be later in the future. So if we're combining these two candles together, we have a good we have a stable selling candle here. We also have a stable buying candle here. So for me, I won't trade here because there is a lot of indecision in the market. I seriously won't. Now I will advise you to go through a course in candlestick patterns. You need to understand candlestick patterns in order for you to be a successful futures trader. You need to understand candlestick patterns. For me, it took me about 2 months to be able to study and learn about candlesticks. And today I can beat my chest and say, yes, I understand to an extent. I understand candlesticks a little bit. And so when you actually know or you actually have an idea of where price is going to, that's where you can be able to get profit. For example, you are speculating that the price is going to drop. It's going to drop to this point. So what do you do here? You come to the order table and put in the values of where you speculate that the price is going to drop. For example, you're speculating that the price is going to drop here at 66,409.73. Then you have to have what is called a stop loss, because the stop loss helps you to minimize your losses. For example, you have a trade and the trade is not going well, a stop loss will help you too. So if you are buying here, our stop loss has to be up. So a limit where when you're losing, your stop loss helps to minimize your losses. So for example, let's put our stop loss here. Let's have our stop loss here. I normally like to put my stop loss higher, so that no matter how the market bounces, I'm still going to be in the trade and still going to have little profit. That's if we're not losing. So we have the last order here. Now we have the cross market, we have the isolated market. Always make sure it's isolated, so the money you have in your account will not, your trade will not cross over into your personal balance. Now this is how you leverage. If you are leveraging 10x, but I strongly advise you leverage 20x. 20x is going to work for you. Okay, here they have 20.5. Okay, so we can use that now. It's just a new account. Just confirm. Order by quantity. For here, yes, we're going to be using a limit order, and let's try market and conditional. Okay, let's use limit order. So how many BTC are we doing here?